What's up, everyone? It's Scotty with MoneyVest. So we got to get ready for a very, very important week. Not only do we have a lot of earnings from retailers coming out, but this is it, folks. We've got the inflation week upon us. November 14th and 15th is when the CPI and PPI numbers come out respectively. I'm going to break down the expectations and talk a little bit about the market's forecast going into next week as we approach very critical areas of resistance. Of course, last week was very strong. We did get a little bit of a breakout. However, we are getting up to some overbought levels for the market technicals as well. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. I would really appreciate it if you find value in these videos. Definitely do check out the links down below if you're interested in joining our Discord and our Patreon. There's going to be a link in the description and in the pinned comment as well, and you get access to all the spreadsheets, including volatilities, market breadth indicators, S&P 500 valuations, intrinsic values, and over 40 plus private members only videos that are also available. And of course, the Discord channels, over 20 plus channels, including trade ideas, alerts, options alerts, everything's going to be included with the link down below. We'd love to have you on board. So this right here is the earnings calendar. So starting with Monday, we've got Monday.com reporting before the bell. And then on Tuesday, we've got companies like Home Depot, we got C Limited, we got PaySafe, we got Canadian Solar. And then after the markets close, there's not going to be any companies that are particularly interesting on Tuesday. But Wednesday is really when the fun begins. We've got Target. Target's been on a significant slide lower over the last several months. Advanced Auto Parts, we got JD.com, we got Zim Integrated Shipping, we got TJX, XPeng, we got Endava. That's pretty much going to be the companies that I'm particularly going to be interested in. And after the markets, we've got Palo Alto Network. Cisco is going to be reporting after the bell. Alibaba's reporting on Thursday pre-bell, along with Walmart and Macy's also reporting that after the bell, we've got Applied Materials, Ross, Gap, and Dolby. And then on Friday, we've got BJ's wholesale also reporting. So it is going to be a pretty significant retail week because a lot of these are retail like Home Depot, Target, TJX, of course, JD.com, Alibaba, all them, even Walmart. I don't think I mentioned Walmart. Walmart's going to be on Thursday before the markets open, and even Gap, Macy's, all these, again, retailers, which are going to give us a little bit more insight into the overall health of the consumer and how much are they actually spending at the moment. Now, Tuesday, November 14th, is when the CPI numbers come out. So the expectation right now for month over month is 0.3% increase. Year over year, we're expected to be staying steady and level at 4.1%. That's going to be core, by the way, core CPI, excluding for food and energy. On a headline basis, month over month expected to increase 0.1% and dramatically slow down to from 3.7 to 3.3%. That is going to be the consensus for CPI going into next week here for the month of October. PPI here, on the other hand, expected to increase 0.2%. And on a headline basis, 0.1%, core 0.2%. And then, of course, on a year-over-year basis, we are already coming down to pretty low levels. I think 1.5, 1.2% is where we're at. And retail sales, also very, very important numbers, expected to decline in the month of October. So negative 0.1% is going to be that consensus. And the GDP numbers, Atlanta Fed now, GDP numbers for the fourth quarter also coming out. I think this is going to be the first estimate, and that's going to be sitting at 2.1%. for the GDP numbers going into next week here. And then this right here, Philly Fed employment numbers, Fed manufacturing index. Of course, we got the initial jobless claims on Thursday. Fed Waller, a couple other members also talking. And of course, the Fed's balance sheet that comes out every Thursday as well, along with jobless claims. And then finally, Friday, we've got, Mary Daly speaking. We got housing starts, building permits, Atlanta Fed now GDP numbers also that are coming out earlier in the week as well. So it's going to be packed with earnings for retailers, the retail sales themselves, and of course, inflation numbers, which are going to be incredibly important in a market moving event. Volatility here, I want to go over. Again, all these spreadsheets are available with the link down below if you want to join. The current read is 14.17. We are under 27th percentile right now. It is still normal, but the moment it drips below 14 is when we kind of enter the 25th percentile for the market, which for volatility, which I think is going to be quite interesting moving forward. And I'm going to, start to become a little bit more cautiously optimistic moving forward here. Only 33% of the current NASDAQ 200 stocks are trading above their 200 SMA. So in other words, 2/3 of the market is still trading below the 200 SMA. And right now we're at 23.24 percentile at the moment. Of course, the lower this number gets, the more oversold we become. The higher this number gets, the more overbought we actually become. And right now we're in the 23rd percentile, so we're kind of over here somewhere at 34.32. So the higher we go, of course, the higher in terms of percentiles we will be. So it's going to be more and more important for us to continue to be more cautious. So 44.15 is where the markets close, and right now the PE multiple at 19.62 with an earnings yield of 5.1%. So that's really where we are. This right here is the sensitivity grid with respect to markets valuation. Kind of gives you a bird's eye view of the overall level for valuations with respect to the S&P 500. And of course, based on an average basis, we are kind of in line at 19.6. However, given how high the 10-year treasuries are, this 19.62 can be argued that it's a little bit more on the more expensive side. So going over to the technicals, S&P 500, next target is going to be at 4,500 for the S&P. However, like I said, we are coming up to those overbought levels for a lot of individual stocks. I did a technical update on a lot of these companies over the weekend. So for Mag 7, we talked about it. The next resistance is going to be at 4,500 on the S&P, and the NASDAQ, the next target and that resistance is going to be at 13,875, all the way up to as much as 14,100 for NASDAQ as well. So those right there are going to be some levels to pay attention to for the market. And of course, we've talked about the Magnificent 7 companies, which collectively are coming up to that resistance as well, almost getting up to overbought levels at 1,800, 1,865 to be precise. If you do get a breakout above this, the next target is going to pretty much be at the all-time high at 1,900. So that's going to be in line with the previous level where we have gotten rejected, and that bull flag breakout will continue. But for some reason, I do doubt that the momentum will come to a bit of a halt going into the next couple of weeks because, like I said, we are coming up to overbought levels for a lot of individual companies, right? So if I simply highlight the RSI MACD levels, Apple, 69. Tesla, not quite there yet, but Amazon, 65. Microsoft, 74. Meta, 63, so getting up there. Netflix, 71. Nvidia, 67. AMD 70, right? So a lot of them are already at pretty overbought levels. So we have to be cautious here going into the next couple of weeks as technicals are not super favorable on the long side and we've got inflation on our hands. So hope you guys enjoyed this video and a complete update on the market and the upcoming week here. Make sure that you do check out the links down below. Join our Patreon, Discord. You get access to a lot of members-only private videos, Excel spreadsheets, and Discord access as well with a lot of trade ideas and alerts. And keep a close eye on the volatility because that's really what's going to be driving the market. You know, very much a directional indicator that we like to follow and we like to track very, very closely. So as always, let me know your thoughts down in the comment section below. And what do you think from a market perspective is going to happen next week? Let us know in the comment section down below. As always, if you enjoyed it, found it helpful, make sure that you drop a like, subscribe. Happy investing. I'll see you all in the next video.